The global debt crisis centered on Greece continues. That's right. They did a couple of head fakes, making Sunday's referendum vote even more dramatic and probably the fatal blow. Now, we began the session with stocks in rally mode after a leaked letter from the Greek Prime Minister, the Christine Lagarde. It looked like this crisis would come to an end, at least this latest chapter. In fact, they agreed to reforms. They said, yeah, we'll reform value-added tax. We'll have fiscal structural measures. We'll do things with the pensions. We'll reform the labor markets, the product markets. It's what everybody wanted to hear, but it did not take long before the story changed and the citizens of Greece were being encouraged to vote no to creditor demands of austerity. Yet Alexis Tsipras' pitch, it's a mix of P.T. Barnum meets Karl Marx. I mean, he promises nothing's going to go wrong. You'll get your pensions. There'll be money in the bank, and we're going to stay in the EU. It's a very dangerous game that will only become more dangerous. Now, troublemakers, the anarchists, are starting to make their move. Needless to say that this weekend, they're going to see a different kind of fireworks in Greece than we'll be watching in America. Let's discuss it. All right, the gang is all here in more ways than one. Hi, I'm Charles Payne, and you're watching Making Money. Let's get right into it. First, let's meet the investment pros. She is the host of The Intelligence Report. Fox Business' very own Trish Regan's with us. Nice to have you on.
Hello, Charles. Good to be here.
And she's back. Scotty Nell Hughes. She stopped making cookies in time to come join us. Cpayne.com's news director. And he's back, the bear, Jeff Sicca, President and Chief Investment Officer of Circle Squared Alternative Investments. Hillary Kramer's with us with a beautiful necklace on. She's, of course, Chief Investment Officer at A&G Capital. And Matt McCall with the fancy socks, founder and president of Payne Financial Group. Let's do it, guys. All right, so the Greeks are being asked to break promises to pay back billions of dollars for the promise of coming out of this unscathed. It's obviously a huge and obviously a very dangerous gambit, Trish.
Yeah, it's very dangerous. We are looking at basically the future of the Eurozone right now, hanging in balance, because Sunday is going to be that referendum. They are going to vote on essentially whether or not they want to stay in the Eurozone. Now, let's not forget the Prime Minister there, Alexis Tsipras, he campaigned on the premise that you could get it all. As you were just saying, sure, Charles, that you could get it all, have your cake and eat it too. I think a lot of people are starting to realize it's just not going to work that way. I mean, we hope right now the Greeks are waking up and realizing if they want to stay in the Eurozone, if they want to be part of the Euro, and it's critical for their future right now in the interim that they are, then they need to get on board and give some concessions.
And ironically, I think late today, a crazier guy named Tsipras is Varoufakis, and he said that he thinks the deal will be done by next Monday. But this is a dangerous game, Scotty. The people in Greece are being torn one way or the other, but no matter what, their choice is pain versus more pain.
That's completely, and they're being torn on an hourly basis. At one point, they're being said, hey, we need to vote yes, and the next they're saying no. No wonder why they're confused. It's almost like this is on purpose. The question is, what happens if they do go to the referendum? They say, you know what? We went out. We went out of the Eurozone. Do they even have a plan yet? Have we seen an economic development plan for Greece if they're independent?
Unfortunately, though, again, and to your point, Trish, they're being told that it's not going to be a big deal, that your pensions are going to be okay. Listen, if you go to the ATM now, you're lucky if you can get out 60 euros. You mean there's going to be more money if we say no?
And they're going to get these people? So you're getting drachma. See what happened in 2001 when this happened. Argentina basically devalued. Their currency fell by 3/4. They fell into a deep recession. Unemployment rate above 25%. They came out of it, though. The reason they came out of it, they had commodities. What does Greece have? Greece has nothing.
But your initial point, though, they took a hell of a hit first, though. Yes. Are the Greek people ready to take a worse hit than they're taking already?
And that's what would happen. So if someone has 10,000 euros in retirement, suddenly they would have 6,000 drachma. So basically it's a 40% loss, and then it would even get worse from there. But in some ways, Charles, it's going to be easier in the end.
You're an advocate for them getting out.
I think they should
get out.
Well, first of all, for us, the United States, this is better because then the euro would start to strengthen. There's too much money coming into the U.S., and then our earnings would be better.
Do you think it would actually strengthen that? I mean, the thought is if they get out, you would see Italy, you would see other countries down the line, if they got in these situations, that they'd see it as an issue.
And even though that makes sense, the market's telling us because the Greek bonds, the Portuguese
the bond yields in these other countries, the potential contagious haven't yet. And don't forget, yesterday, Spain's prime minister said, I want you guys to vote yes, the Greek people, and get rid of these nuts that are running your country. All right, Jeff. You've got an immense portfolio. You guys are in stocks, alternative investments, the kind of investments that might have, if you connect the dots, could have some sort of exposure here. But for the most part, most people watching don't have a direct exposure, but there is risk to everyone.
Yeah, I mean, the biggest misconception right now is that Greece and what happens in Greece is not going to affect the banking system is not going to affect the economy as a whole.
How would it affect banking? I mean, because 3 years ago, right, 2012, essentially, the Europeans, IMF, ECB, and they made up a few other things, said, okay, we're going to take the pressure off the banks. Once again, they took the pain of the banks and the mistakes of the banks and put it on the shoulders of taxpayers. Yeah. But you still think because is it the derivatives market or what?
Yeah, here's what, when Mario Draghi came out and he made this broad statement. The ECB will do whatever it takes to save the euro. You had a lot of traders, you had a lot of speculators, and you had a lot of institutions who took him for his word and went out and used derivatives to leverage off of the ECB's ability to make this thing.
Even if Greece leaves and Greece falls apart, the Grexit, whatever you want to call it, it doesn't mean the euro falls apart. The euro actually rallied after that. So making a bet on the euro, that doesn't affect the banking system.
The imperative factor here is Italy and Spain. I think everybody has forgotten that Italy and Spain have issues of their own.
They do have issues of their own, but I think Italy has this charismatic new guy, young, handsome. You know what I'm talking about, Trish. I don't think that he's going to fold up the tent so quickly, and Spain seems to be coming out of it.
Well, you know, they seem to be coming out of it, but here's the concern. If you see the political tides turn in any of these countries, then the entire financial community is going to say, you know what, it's going to come down to crazy domestic politics. And I'll tell you, this is why the Eurozone in and of itself will never work. Milton Friedman predicted this back in 1997. He said you cannot have an economic unit without a political unit. And that, at the end of the day, is their problem. The United States of America is the United States of America because we became one unit.
Right. I've always said, though, to that point, that it's always been my contention that Germany, behind the scenes, always wanted this to be the United States of Europe with Germany in control.
Hey, by the way, Charles, interesting little factoid for you. You know, the only developed nation there in Europe to see their debt forgiven twice in modern times?
Germany?
Yeah. 1952 and 1991.
But what did they have to give up for it? Right. Well, we know a few times they had to give up some of their, after the wars, they had to give up some of their manufacturing capability, but it doesn't matter. Germany has what it takes, period. The question is, does Greece have what it takes? Do they have the innovation? Do they have to get up and go? Yesterday on the show, you talked about them being, you essentially said that the Greeks were too lazy to build an economy from scratch.
They were, and I think it's because the government has allowed them to be lazy. I mean, that's why they're not living in a realistic world. But we're seeing it here in America. I always joke that we have a drive-through society right now. I think we've moved to an app society. So we have to be very careful that we as Americans don't follow the same path.
Right, we'll ask about the question later in the show, is America on the same path, or do we have what it takes not to fall off the same cliff? But